Hey viewers, welcome to the very first episode of RHO Market Chat. With me today we have Robin. He's the top tier remisier and principal investment specialist for Phillips Capital, and he's one of the most active and successful traders in Singapore. So last week we had a bad week. We know that the Dow Jones Index has fallen more than 10% below its recent peak, with the S&P and Nasdaq following similar patterns, entering one of the worst weeks since the fall of the financial crisis. So Robin, what are your thoughts? Are the global financial markets entering a bear market, or is mere healthy correction? That, I believe, is a burning question for many investors, and I would like an exclusive response from you.
Well, Juran, thank you for having me on the chat. To answer your questions, I don't think anybody can tell you whether we are really entering the bear market. But what I really want to be sharing on this chat is how I look at the price action from the charts. And today I hope that I can share a couple of tips and of how I look at the charts and how from the charts I'm predicting the future movement of the Wall Street indices. First of all, on 20th of February, even before the Dow Jones took the plunge, I've already warned the general public that from the price action of the charts, there could be a big fall coming. And true enough, a couple of days after I posted this on the chart, we had a huge plunge in the Wall Street index. Maybe I should just share a little bit of how I look at the charts. So this is basically my trade plan, and I have been waiting for Dow Jones to hit my target, which is here. And I remember that when Dow Jones hit this resistance here on the trend line, I warned of a major collapse here. It went down, did not go down further. In fact, took a rebound, and now it is finally down. And with this formation, just looking back at the charts, we now have a double top formation, and the double top formation on the chart is a very important technical reversal signal, signifying that Dow Jones could have hit its peak for the long term, and it could be doing a major reversal down. Let me just share more of my trade plan of the Dow Jones and Nasdaq. All right, so this is Dow, and let me try to make some sense out of this chart. So this is where I was calling a double top formation, and that was where it is. And today we saw the plunge. Well, but for me, really, this line here, this trend line is really very important. You could see these three peaks, all right? And the Dow was testing the peak 1 time, 2 times, 3 times, and this is where it broke. And the minute when Dow broke below this peak, all right, that was where I said that we could have a bigger fall coming. And now looking back, Dow is still falling. The question is, have we hit the bottom? Is it time to bottom fish? My guess is from my trade plan now, all right, is that the Dow has fallen into this channel resistance support, all right, and you could see the red lines. Those are my channel lines, and the minute it breaks this channel, technically it should be heading towards this channel line. It has fallen about 15% from the top for 6 consecutive sessions, and we could expect an oversold rally, but every rally, just by looking at the charts, should be a sell rather than traders trying to bottom pick the market. So this is my resistance on the charts, and this is my first target. Now, many investors are asking whether it is a bear market, but my question is, do you know the definition of bear market? Well, the common definition of bear market is prices falling more than 20%. So where is 20% on this chart? 20% on this chart is 2643, all right? And I guessed that Dow Jones would make an attempt at 2643, and that is where we will hit an inflection point, and that is where many were asked, is it going to enter a real bear market? All right, so watch this 2643, very important. And when it hit 2643, it will hit round about this trend line here. All right, but what I believe is that from the price action of Dow Jones, we are in a major fall, and we could, like I said, see small little rebounds here and there. But eventually, these are the targets that we should be seeing in the near future. So that's my sharing of Dow Jones. In fact, it's really quite weak. It has broken below the 200-day moving average. All right, it is the first major index on the Wall Street index, principally the S&P and Nasdaq. It is the first one to dip below the 200-day moving average. So let me just show you another chart, which is the Nasdaq chart. So the Nasdaq chart, right, on Friday just hit the 200-day moving average, all right, and you could see, like the Dow Jones, the Nasdaq has been testing this resistance line once, twice, 3 times, 4 times, and on the 5th time it broke, all right. So Nasdaq now, after breaking out, is coming back to test this trend line here. And I believe that this is a major support here. We could see a rebound here, but any rebound, like I said, right, investor should not turn overly bullish. Every rebound must be taken as an opportunity to sell. So if Nasdaq rebound from here, this the resistance, the R1 and R2. I don't think it's going to R2. I believe in the short term is capped at R1. And Nasdaq have tested for the first time the 200-day moving average. Could see a little rebound today, but eventually it's going to break the 200-day moving average. Like I say, 20% from the top is defined as a bear market, and 7790 is the bear market boundary. I believe that Nasdaq similarly will come and test this bear market boundary. And what you could see here is my trade plan for Nasdaq. We could see that this is bear market boundary, but before we go that, we hit one support here, another support on the S3 at 7380. All right. What you saw here, what you see here, right? It's my one of the trade plan, the trend channel lines on my trade plan, and this will 6,500. If Nasdaq enter a bear market, it should hit eventually 6,500, which will be a very, very significant support, all right, for Nasdaq. So whether it's a bear or a bull market, all right, for me, it's really just following your trade plans and following the price action.
Thank you, Robin, for your very insightful and detailed analysis of both the Nasdaq and the Dow Jones. So another question has popped up today. is that something very interesting in terms of the trend. We know that China is actually the center of the coronavirus. And even today, we have reports releasing that China's PMI is of record low in recent years. But what interesting trend is that from past week to the present week, and especially today, we have seen the Chinese market performing relatively stable. And today even went up 3%. So this is something that's interesting, and I believe investors are wanting to know what is keeping the Chinese market ticking even when the current economic environment is so uncertain.
Well, that's a very interesting observation. Of late, we have seen the Chinese market really on a divergence from the Dow Jones or on the Wall Street index. The Wall Street index has been coming down both in big in magnitude and speed. Right? But the Chinese market has been relatively stable. Today it's up 3%. And the reason really is I think investors are afraid that this coronavirus that we have seen spreading across Europe and Asia will wash onto the US shores. And what we could see, right, happening is the dollar index has been on an uptrend since August 2018. It hit the peak that I predicted at 99.8. And today we could see the dollar falling against a major basket of currency, hitting the top here and coming down here. And we could see the dollar index is really showing us that the funds are really flowing out of the US. And the possible reason could be the fear of coronavirus spreading to United States. Right. So not only that we saw the dollar index coming down, and you could see that it has got even further room to come down. All right. Last we saw was 97. I expect it to hit the bottom here at 96.8. All right. And if you look at the US 10-year Treasury bonds, right, the bond yield has hit an unprecedented low of 1.07%. We have never seen in our lifetime the bond yields hitting such a low level on record. And that, to me, is also investors getting away from risk, going into safe haven because they're expecting more bad news to come. So question is, will this continue? Will the Wall Street index keep coming off, and funds will flow to alternative markets? Well, we have reason to believe that by just looking at the 10-year Treasury bonds and the dollar index. And in fact, this is another chart that I want to show you, and that is the volatility index. You could see that just a week or two ago, we have seen the volatility index shot up. All right, so what is a volatility index? A volatility index is a market index that shows price fluctuation, and when the price fluctuates a lot more, you could see volatility index spiking up. And volatility index is one of the indicators that could possibly be telling you that the trend is changing. So let me just run through the volatility index. And let's look at the volatility index just before the global financial crisis. So look here, right? Just before the global financial crisis, the volatility index also started with spikes. Look at that, all right? It had got spikes, and the market was like what we are seeing today, very volatile. And the spike happened for a couple of months before we see a huge spike, and that was where we saw the low of Dow Jones Index. So along the way, we could see also many spikes, but this many spikes is a one-off spike. All right, one-off spike normally does not usher in a bear market. So for a bear market to happen, we need some built up in volatility spikes. And if you could see some built up in volatility spike here and it lasts for a little while, right, that could be an indication of a bear market that we are currently in. All right, but as of now, I urge traders, investors to be watching the volatility index very closely. And if you look at history, the only volatility index that came very close to showing a bear market was towards the end of 2018. You saw that towards just before 2019, and that's where we saw the Fed, right, making about turn in their interest rate policy from raising interest rate to cutting interest rates. And that's why when they raised interest rate, you could see that the market fell, all right? But before that, right, you could see a built up in volatility, all right? Here was a built up in volatility, and then we have a spike in volatility and the market hit a bottom, all right? But this here did not, all right, turn out to be a full-fledged bear market, all right? So here we are now at the start of another volatility spike. Will this turn out to be a bear market? We don't know, but it will be good for traders, investors to keep a close eyes on it. Well, today I have many questions asked about me from the trading floor today. I see a lot of traders and investors scooping out stocks today, thinking that the market could have bottomed because the Chinese market was, instead of going down, all right, because of the reports of one of the lowest PMI ever recorded, and those are bad news. But yet we could see the Chinese market going up 3%. Traders took it as a signal that the worst could be over. But my take is that we have to be careful. And today, another reason why the traders were bullish about the market is that there were talks that the central bankers could be on a coordinated action, all right, to ease monetary policy. Well, the Fed meeting is coming up this month on 17 and 18, and this is an event that traders should watch for. There is a 25 basis cut already built in. In fact, if you look at the Fed Fund futures, the Fed Fund futures is already factoring in a 75 basis fall for the whole year. Well, this is really frightening investors out of the US market as interest rate goes down, and the trend of interest rate is indicating that there are more bad things to come. All right, so continue to watch for the volatility index, continue to watch for the price action, and I hope to see you very soon in our next chat.
Hey viewers, if you like our RHO Market Chat program, click here to subscribe and turn on the notification button to get the latest episodes of RHO Market Chat. I'll see you next week.